Scalp trading is buying or selling a stock, and then holding it for a short period of time. This simple scalping strategy only needs 3 indicators to build. The steps for the strategy are: identifying the price trend, find the right candlestick pattern, and the correct RSI. I will not only just explain the strategy and magically tell you that this works, but I will code the strategy so that you can automate it and don't have to sit in front of a computer all day. After coding the strategy, I will show the performance by backtesting with a strategy tester. There are many variables in a strategy. We will see how the performance of this strategy changes with different input values. The script is written in PineScript, and the platform used for the strategy is TradingView. Now let's begin. Since I am going to write this strategy in a script, first let us define some of the inputs that I will be using for the strategy. The strategy starts with an initial capital of $50,000, and with a default trading quantity of 100. So anytime it places a buy order, it buys 100 stocks. The input trend period is the time period for the simple moving average indicator. A default value of 20 means the moving average line will be drawn with an average price of the last 20 bars. The input RSI length and the input RSI buy threshold are the inputs for RSI measurement, and specific RSI level for entering the buy signal. We will explain details of RSI in a minute. Next, we have the input for the percentage of taking profit amount, and the percentage of stop loss in case the trading goes against our favor. We also have a start and end time, within which the strategy will be active. The first step of this strategy is to find the right trend. This is a buy-only signal, meaning it only looks for the buying opportunity, with an anticipation that the price will move up. A scalping strategy should always follow the price trend. One way to find the trend is to use the SMA, or the simple moving average indicator. A simple moving average is the average price over a specified period of time. It is called moving because at each bar, it updates the average with the specified number of prior bars. So for a 20-period moving average, the line is drawn by calculating the average of the previous 20 bars. If the price is above the moving average line, then it is an indication that the price is trending upwards. The further above the price is from the moving average line, the more upward pressure it indicates. At this stage, a lot of buyers are buying the stocks, and the market is seeing a lack of seller. However, when the price is moving closer to the moving average line, that means that the market is in a stalemate, and there is no clear trend at this moment. For this strategy, we always want the price to be above the moving average line, and we will be using a 20-day moving average. Let's code this step of the strategy. The SMA value for the current bar is calculated for the defined input trend period, which in this case is 20. It then checks if the current closing price is above the moving average line. If that is the case, then the moving average signal will be set to true. This is the signal for our first step. The SMA line is also plotted on the chart, displayed with a yellow line. The second step of this strategy is to find the right candle pattern. A bullish pattern is when a red candle is followed by 2 green candles. The rules for the green candles are: the high of the current candle is higher than the previous candle, the low of the current candle is lower than the previous candle, and the closing price of the current candle is higher than the closing price of the previous candle. Although it is easy for the human eye to find such candlestick patterns, writing a script for the red and green candles is not trivial. To determine the first red candle, we will need to get the price information of the previous candle. In the script, we will define the candles as current, 1, 2, and 3, which represents the current candle and the previous candle bars. Now, let's code this step of the strategy. First, we need to find the high, low, open, and closing price for each of the 4 candles. Based on the rules described, we can now determine if the first of the 3 candles is a red one or not. Following the opposite rule for the red candles, we can also determine if the first and second candle bars after the red candle are green. If all 3 candles satisfy our requirements, meaning the first candle is red, and the second and third candles are green, then we set our step 2 signal as true. We say it candle signal in the code. The last step of this strategy is to check the RSI signal. RSI stands for Relative Strength Index. It measures the speed and magnitude of a security's recent price changes to evaluate overvalued or undervalued conditions in the price of that security. The standard number of periods used to calculate the initial RSI value is 14. Generally, when the RSI indicator crosses below 30, it is oversold and is a bullish sign, and when it crosses above 70, it is overbought and is a bearish sign. For this strategy, we will initially set the RSI length to 3 instead of 14. Instead of following the 30-70 rule, this strategy requires RSI to be above 50 for a buy signal. Let's code this stage of the strategy. First, we get the current RSI value for the given length. Once we have the RSI value, we then check whether the current value is above the input RSI threshold or not, which is set to 50 for this strategy. If it is above the threshold, the RSI buy signal is set to true. Now that we have all 3 buying rules, let's quickly code up the buying and selling conditions, as well as enter and exit of the strategy. I'll explain the code after this quick code break. Based on whether each step is true or false, we can decide if the current candle should trigger a buy signal. If all 3 conditions are true, then a buy signal is set to true. Now we need to let the script know when to enter the trade for us. To satisfy the buying condition, the script needs to have a true buying signal, the current position set to 0, meaning that there is no active trading going on at the moment, and the trading is taking place in between our defined time frame. The take profit condition and the stop loss conditions are only active when there are open positions. In this case, we defined a 1% profit and stop loss at a 1-to-1 ratio. Profit taking and stop loss are input parameters, so the user can easily change them for different values. Once we have the buying condition met, the Pine script will enter a long position and update the buying prices as the trade progresses to the next bars. If the take profit condition is met, meaning the price went in our favor, the strategy will close and take the profit. But if the price reverses and goes in the opposite direction, the strategy will still exit the trade once the stop loss condition is met. When applying this strategy within TradingView, we can see the strategy in action. Just like any other strategy, this also makes profitable trade, and sometimes takes the loss. Before I move on to the performance of the strategy, if you found this video useful, please leave a like and subscribe to the channel. As I mentioned at the beginning of the video, I will run this strategy with different input parameters to see how the strategy performs with varying parameter values. For this performance analysis, we will only run the strategy on SPY. Of course, you can test the strategy with endless number of combinations of input parameters. Here I'm providing only a small set of combinations to give you an idea of the weakness and the strength of the strategy for different parameters. Moreover, this strategy was tested on one stock only. For a different stock, the performance can be very different. You should not blindly use any strategy until you are confident that the strategy fits your trading journey. You can take this strategy and improve upon it, experiment, and overcome some of the shortcomings this strategy have. Thank you for watching. Next time, I will come back with a different strategy and its performance.